Hi there, my name is Nick Wilson and I'm doing a presentation on the high-air takeover of Fisher & Paykel. First of all, a little bit of an introduction to the two companies. The High-Air Group is from China. They were founded in 1984, just over 30 years old. So now they have transformed themselves into the #1 home appliance brand in the world for the last 5 years. Their global revenue is $29.5 billion in 2013. They employ over 70,000 people and they operate in 160 markets worldwide. They also have a subsidiary which is listed on the Shanghai Stock Exchange. Fisher & Paykel, the target company. Founded in 1934, over 80 years old, the #1 home appliance brand in New Zealand, generating over $1 billion of revenue in New Zealand, operated in 50 countries, manufacturing in 5, USA, Italy, Thailand, Mexico and New Zealand. They were delisted from the NZX and ASX upon the takeover. A little bit about the home appliance industry. The global appliance industry is growing at 4% per year. That means that there's nearly 400 million units worldwide. The environment around the industry is so that it's heading towards more eco-friendly, more environment-friendly machines. So the people who are going to be successful in the industry are the ones who are going to make them that are innovative and user-friendly. Some key dates on the takeover. In 2009, High-Air brought a 20% stake in Fisher & Paykel to help them refinance their debt. On the 7th of September 2012, High-Air announced their intention to take over Fisher & Paykel. They offered $1.20 per share, which was a 60% premium. Upon that, Fisher & Paykel ordered an independent review. To sweeten the deal, High-Air then raised it to $1.28 per share. On the 6th of November 2012, this was accepted by the board and they now secured a 90% stakehold in the company. On the 15th, they exercised their rights to acquire all outstanding shares under the takeover code. On the 27th of November 2012, they were delisted from the ASX and NZX. What type of merger was it? Well, it was horizontal. Both Fisher & Paykel and High-Air are in the home appliance industry. It makes sense in terms of market placement. When you think about it, High-Air are the #1 brand in the world for home appliance and Fisher & Paykel are the #1 brand in New Zealand. Both companies also have subsidiary companies as well. The benefits for the merger. High-Air gained industry consolidation. So by operating in 160 countries, they now have access to 2 more markets, New Zealand and Australia predominantly. They diversify to reduce their market risk. They have complementary resources that create synergies. Fisher & Paykel have premium market placement with luxury brands, whereas High-Air have access to a lot of markets, so they can bring these brands to all those markets. High-Air are strong in refrigeration, but are weak in dishwashers, which means they can apply to more of the families around the world. Also, High-Air faces strong competition from Samsung and LG and the like in China, and they need a top-end product, and Fisher & Paykel has this. High-Air gives opportunity to expand. Fisher & Paykel were wanting to expand, but they didn't have the capital to do so, or their connections, whereas High-Air provides this. As I said, Fisher & Paykel are at the top end of the market and they own trademarks and patents, especially the double drawer dishwasher, which is what High-Air wants. What were their takeover tactics? Well, it was a stock for cash deal representing a 71% premium. Fisher & Paykel shares were quoted at 75 cents. High-Air offered $1.20 per share, which was a 60% premium. They increased this to sweeten the deal at $1.28 per share, which was accepted. The deal was worth $927 million, and it gained acceptance from all the major shareholders. And under Rule 54 of the Takeover Code, they acquired all remaining shares and gained control of the company. Fisher & Paykel's defence tactics. Well, there were little. It was a very friendly merger. Fisher & Paykel's board worked with the shareholders to reach a deal on behalf of Haier. There was a little bit of resistance from Tower Investments, who publicly voiced their opinion in the paper, saying they were reluctant to sell their share. The deal was done under 3 conditions. The first one was that product development remained in New Zealand. The second one was that the price offer was within the valuation range by Grant Samuels, who did the valuation of the company, between $1.28 and $1.57. Fisher & Paykel also had to remain a standalone company led by local management. Now we're looking at post-announcement of the intention to merge. Fisher & Paykel were trading at 75 cents per share on the 7th of November. In the morning, Haier made the announcement they had intentions to take over the company, and the company increased their shares to $1.27 in the next 6 weeks. That's a 40% increase. On the 15th of November 2012, they exercised their rights to acquire all remaining shares, and then it was delisted from the NZX, X and ASX. Haier, on the morning of the 7th of September 2012, they were trading at $11.18. They made the announcement, and subsequently they decreased 5% to $10.56 per share. In the next 4 weeks they increased to above levels pre-announcement to $11.32, and today they are trading at $15.27 as at the 29th of April 2014. Thank you for listening to my presentation on Haier takeover of Fisher & Paykel.